So these are the main differences between Forex and stocks. For Forex, the trading volume is crazy high. It's literally at $5 trillion. That's the daily trading volume. Trillion. I don't know how many zeros that is, probably like 12 zeros. And then while stocks is only $200 billion trading volume. So if you thought stocks was like the biggest financial market, you're wrong. Forex is the largest financial market in the world. And then followed by market hours. The good thing about Forex is that it's open 24 hours a day, while stocks is only open for 8 hours during the New York session. The New York session, it will open right then, and it only open for 8 hours and then it close. Forex open all day long, 24 hours, 5 days per week. And then for commissions, Forex have minimal or no commission at all. The commission is basically like quite low, and then for stocks there is more commissions, so the transaction costs are much higher and the broker charge you a higher commission. So for short selling restrictions in Forex, you are able to buy and sell without any restrictions, which means you can profit if the market go up or down. While for stocks, you can long, but there are short selling restrictions on certain brokers. Certain brokers might not allow you to sell that stock, right? So if the stock goes down, guess what? You can't profit at all. So ultimately, it depends on your broker. Lastly, the instruments. For Forex, there is 70 plus currency pairs, but we really only focus on a few. I personally only focus on 3 to 5. And then while for stocks, there is over 3,200 companies on New York Stock Exchange. So it's really quite hard to find like the perfect stock to trade because there's just so many options right there. It's just like with girls, right? When you have so many options, it's quite hard to choose, man. Can you relate? So which one should you be trading? Ultimately, it depends on your trading style. Forex is much more volatile, so it is perfect for traders who want to get in and out of the market fast. If you're looking for long-term growth like investment or position trading, which is basically holding the trade quite long, the stock market might be more suitable because the volatility in the Forex market can seem as negative since the stock market doesn't really change direction as often. What this means is that in Forex, price can move up and down fast, like within 10 minutes, it can move up and down fast. But in stocks, it might be a little bit slower. Like the stock can uptrend for days or even months, and then go downtrend only for maybe 1 month, right? So ultimately, it's really different for both Forex and stocks. The same technical analysis is applied. So understanding candlesticks, trend lines, and market patterns, they are all the same for both Forex and stocks. The only difference is the fundamentals which move the market. So ultimately, all the strategy, all the technical analysis that I'm teaching in this entire course applies for both Forex and stocks and also crypto. So don't worry if you are trading something else other than Forex. Whatever you learn here will apply to other instruments as well. So like I said, the only difference is the fundamentals which move the market. The Forex market is affected by things like interest rates and the strength of the economy, while the stock market depends on companies and their revenue and how they help to stimulate the economy and stuff. So the stock market relies more heavily on fundamental analysis compared to Forex. Example is that if you want to choose a good stock to invest in, you will obviously be looking at things like balance sheets, financial statements of that certain company, and that itself is fundamental analysis. So ultimately, it really depends on your trading style and what you prefer. The stock market is not as volatile as the Forex market, so this means that the Forex market will allow you to make more money faster, but that also means more risk. So choose wisely.